Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello, everyone. Welcome to Dad's Market Stats. On today's video, we're going to be discussing the latest earnings call that Apple had. If you remember, on yesterday's video, we discussed Apple's news that was surrounding Apple in the last few years. And so on today's video, we're going to be discussing the earnings call. I was able to listen in to the earnings call. It was on Thursday, last Thursday. Yes, that's right. So just to give you a couple of highlights from that earnings call. Now, Apple was able to pay off $3.2 billion of their debt, and they're still left with $105 billion in debt. They also made a net cash of $58 billion, which means that there's still $47 billion in debt. Now, they were able to pay actually buy back shares in $23.5 billion worth of shares buyback. And they paid dividends of $3.7 billion. So all of that adds up to leaving them with $47 billion in debt after this last quarter. Now, they also raised their dividend for the next quarter is going to be 25 cents per share that they're going to be paying for anyone who holds Apple shares by May 13th. And they can expect to receive that dividend payment on May 16th. Well, as we can see on the chart here, ladies and gentlemen, Apple is currently at 182.40. So because they were able to buy back shares and because they increased their dividend by 1 cent, that means that a lot of people bought into Apple, seeing that the price was going up after its earnings call. Let's see what happened. It was trading at 170, 171, and after the earnings call, it went all the way up to 185. Now, is this a good thing or is this a bad thing? I mean, we know that they were able to buy back shares, and that definitely caused the stock to go up because by buying back shares, there's less supply of Apple stock in the market. Now, if demand this for Apple stock stays the same, well, then that means that this stock is going to go up in value, and that's what happened. But should you buy into this? Not really, because we can expect Apple shares to come back down. Why can we expect that? Because as we talked about in yesterday's video, we know that they don't really have a lot of good products out right now. Their sales have declined. And in order for their stock to start going back up again, well, they need to come out with new products and products that people want. So that means that that's going to cost them money too. It's going to cost them. It's going to cost them to go more into debt. But we know Apple can do it. They can definitely make the $47 billion that they have in debt. They can make that in 1 quarter, right? But they have to make products that people want. So because of that, I think that Apple is in trouble right now. I think that this stock is going to come back down to 170 by the time their next earnings report comes out. It could even go as low as 165. Why am I saying that? Well, because it actually did reach 165 at one point. Actually, went even lower than that to 164 on April 19th. So if you wanted to roll or spin the wheel with Apple stock, ladies and gentlemen, we will be looking to buy in at a price of 165. I want to say 165, even though it could go to 164. But buying it for 165, does that mean that we have to wait for Apple to go down to 165 in order for us to buy it? No, it doesn't mean that we have to wait for Apple to go down to 165. All we have to do is look at the options chain. We're going to look to sell a put, and we're going to look at the put of 165. So here it is right here, 165. Now, as we can see, the one that's expiring this week is only going to pay us $3. So let's go out to a month away and see how much that one will be paying us. So at $165 put, that means that we'll be buying shares of Apple at a discount. We'll be buying them at 165 instead of the current price that it's at, which is 182. So we want to buy it for a discount. We see this put is only selling for $28. So we're going to have to go a bit further out if we want a nice premium. So let's see. By the time Apple's next earnings report comes out, it's going to probably be around August. So let's go all the way out to August and see how much of a premium we can get on selling this 165 put. Yes, this one is giving us $195. $1.95 times 100, because each contract or each option that we sell is for 100 shares of Apple. So $1.95 equals to $195 that we'll get paid by selling this $165 put. So let's go ahead and sell this put. Okay, let's see here. It says that the maximum profit is 195. All right, the break-even price is 163. So even if Apple were to fall to 163, we would still be making money. So let's go ahead and review this order. Ah, look at this. Here we run into our first problem. It says not enough buying power. You don't have enough buying power to place this order. So this is the first problem that we're going to run into if we wanted to sell this put. Ladies and gentlemen, if you want to sell this put and buy Apple shares for a discount at 165, well, you're going to need to deposit funds. How much? You're going to need to deposit $16,500. Why? Because 100 shares of Apple, if you wanted to buy it at 165, it's going to cost you $16,500. So you would need to have that as collateral in order to be able to sell this put. Now, if you wanted to invest $16,500 in order to sell this put, how much of a return on your investment are you making today? You're only going to make 1.3% return on your investment by selling this put today. Right, ladies and gentlemen? So does it make sense to do that when you could easily just leave your money in your brokerage account and make 5%? So it doesn't make sense to sell this put and only make 1.3% return on our investment if we could just leave our money there and make 5%, which is 4% more, right? So that is our first problem when we run into Apples and being able to spin the wheel with this stock. So this is not a good stock. That's our first sign that this is not a good stock for us to wheel. Okay. Not to mention that I want you to make passive income every week. So if every week you sold this option, you would have to every week invest $16,500. Now, in order for us to do that, we're going to have to sell the Bentley or something. And that's a problem because I don't ride a Bentley. All right. I have a Honda Odyssey. Yes, that's a family car that I have, right? Of course, obviously, because it's dad's market stats, right? So that's the car that I roll with. So we're not going to be able to invest $16,500 every week to make passive income by wheeling this stock. So that's a no-no, ladies and gentlemen. We're not going to be able to do that. So if you had that kind of money, ladies and gentlemen, and you want to make 1.3% return on your investment, your $16,500 that you're investing every week, feel free to do that, ladies and gentlemen. If you have that kind of money and you're watching this channel, oh man, I have some good people, some good viewers on my channel. So that's great, ladies and gentlemen. Let me know how you met me. All right. But yes, definitely this is a big problem. So this is a big no-no for Apple stock. We don't want this stock. Not to mention that, remember, you're also going to have to take into consideration the $25 dividend that Apple is going to pay you for holding 100 of their shares. All right. So you want to take that into account. So 195 plus 25, that's 220. So yeah, that's how you're going to get your 1.3 return on your investment by selling this Apple put today. For me, that's going to be a no. But if you're willing to do that and you only want 1.3% return on your investment, then go right ahead, ladies and gentlemen. I'm just showing you how to buy Apple shares at a discount. But let's see how I did with the stock that I'm wheeling last week. I wanted to give you a quick update before I ended this video today. Last week, I tried to sell a $2 put for $30, but at last the stock was going up and I was not able to sell it for $30. So what was I able to sell it for? Well, let's take a look. Let's take a look at my history here. So I did manage to sell the $2 put expiring May 17th for $25. Okay. I had to invest $200 and I got $25. That's 12.5% return on my investment on this put option that I sold May 2nd. So that's the first option that I sold this month. All right. So that's a good return. 12% is a good return. I'll take that. All right. Instead of 1.3% with Apple. Now, I also managed to sell two $2.5 calls expiring June 21st. I had to go all the way out to June 21st to sell these calls. All right. Because nobody was buying any options at 2.5 earlier than that. But how much did I sell it for? Well, I sold it for $15 each. So I made another $30. Now, since if you take a look here, ladies and gentlemen, if you take a look at my dollar cost average, let's go back up to the top. Dollar cost average is $2.53. That means that each contract that I sell is going to be worth $253 for me. I'm investing $253 for each call contract that I sell. Okay, so 253. I sold two of them, so 253 plus 253 is 506. It's $506. So I invested $506 here on the two call options that I sold, and if I'm able to close out the wheel by the time this contract expires, I'll be making $530. So that's $24 more. So that's another close to 6% return on my investment by selling these two call options right here. But anyway, that brings me up to a grand total of $55 that I have made in passive income for the month of May. So we see here, May 2nd and May 3rd, right? So I invested $506 here. I made $30. I invested $200 here. I made $25. That's a total of $706, and I made $55 on my $706 investment. So that is a nice return of 7.7% return on my investment that I made last week. So I'll take that, ladies and gentlemen. So that is more than what I would make by leaving my money on my broker's account and making 5% return. So I'll take that, ladies and gentlemen. So I hope that you learned something from this, ladies and gentlemen, and that you're able to benefit from these videos. Like I've said before, on my next video, I want to discuss with you the put option that I'm going to be selling this week. I'm going to continue to sell put options as long as my stock is staying below $2. I'm going to be looking to sell another $2 put option. So let's see which one is the best one to sell on Thursday, because that's when I'll be depositing another $200 into my account. So until then, ladies and gentlemen.
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.